turn off the Slack notification? But we can go live now.
Yeah, I already did. I turn on the video.
Okay, guys, we can start.
Hi.
There we go. What's going on, Josh?
Hey, guys.
Good to go. Let's wait on Scott and Karush.
Yeah.
Oh, hey, everyone. Didn't realize it was time for the entrance.
Hi, everyone.
What's up, guys?
How's it going, guys?
Okay, should we start? So, hello everyone, and welcome to the first ever episode of our new show, Phemex Crypto Talk. We are very excited to bring you this project. We have thought about it for a long time, and it's finally here. And the idea behind it is to create a place where everyone can learn something new that can help them, no matter your trading experience. At Phemex, our main drive has always been to help others manage risk efficiently and trade simply and safely. And this is yet another step by us towards achieving this goal. And Phemex Crypto Talk is where we'll invite experienced cryptocurrency and derivatives traders to discuss all crypto-related topics, from relevant educational, personal experience and knowledge to the latest news, market insight, and current trends. And don't worry, we will also have plenty of fun here with different games and challenges. And we also strongly encourage all of you to actively comment and express your views in the comment section. And as for today, we are super excited to be joined by some very special guests from the crypto world, including Scott as the Wolf of All Streets on Twitter, Josh as Josh Rager on Twitter, and Karush, aka Karush AK on Twitter, and Ryan as Catherine Clark on Twitter, who will be our main host. And could everyone please introduce themselves in a couple of sentences?
Great. Okay, so I'll start, guys. My name's Ryan, also known as Catherine Clark on Twitter. I'm the horse guy. Clark is, a lot of people mistake me for being named Clark, but that's actually one of our horses here where we are. I began as an equities trader, traded originally equity derivatives, got into Delta One futures, traded crude oil, and then got into trading Bitcoin more specifically as a primary focus as of the last 3 years. So I pretty much focus all my time now on trading Bitcoin, not so much as, I guess, participant in traditional markets as I used to be, but I think I'm in the right spot.
Yeah, I can go. This is Josh, and yeah, I have the privilege of working alongside Catherine Clark with Block Roots, where we do education and on crypto markets specifically. But yeah, I think overall, I really got interested in the markets after the housing crash back in 2008. So of course, it's been nothing but uphill from there in a good way. And so, got into Bitcoin around 2016, prior to euphoria, bought around close to $2,000, and I held all the way through, right? So I was hoping it was going to go to $50,000 like everybody was saying. So, but yeah, super excited about this chat today with these guys, and should be fun.
Cool. I guess I can go next. Hi, everyone. My name's Karush. I'm very happy to be here. My history is I got into Bitcoin crypto space around the end of 2016, early 2017. And yeah, it was a wild ride back then. Before that, I didn't really believe in non-passive investing or trading strategies. My mind quickly changed once I experienced the space. 4 years later, I'm still trading cryptocurrencies. I also educate on Twitter, and my background prior to this was in mathematics. My main reason for being here is to provide some racial diversity and maybe even help out with some trading information.
Good stuff.
I can't beat that. I can't beat that. That's impossible because I add nothing in that regard. My name is Scott Melker. People often know me as the Wolf of Wall Street on Twitter. My background is not necessarily in finance. I had a 20-year career as a DJ and music producer, but I bought my first stock in the late 1980s and have traded exceptionally poorly since until the last few years when I actually got it together and became a professional at this. But trading and investing was always something that I did in the background and on the side, as I said, with mixed results through dot-com bubbles and the Great Recession and all of the good times that anyone who's been around for a while experienced. Came to crypto in late 2016, early 17, like everyone else here, it would seem. I backed into it to make money as a trader, and then was sort of drank the Kool-Aid and swallowed the red pill and became much more of a believer and a maximalist of sorts. So now I do focus primarily on crypto as well.
Awesome.
Great. So thank you so much for this brief introduction, guys. We are so happy and so excited to have you here. And now for the topic of today, we'll be speaking on the secrets of being the successful crypto trader. And I think that there couldn't be a better topic to start off with when we have such an experienced panel. And well, without further ado, Ryan, if you please take over and let's just jump right into it. Meanwhile, if you have any interesting comments on your own trading experience, or you want to share anything, leave us comments in the comment section and we'll choose those comments, and to some of you we'll give the 3 months of premium membership on Phemex.
Awesome.
Ryan.
So as far as the secrets of being a successful crypto trader, I think that there are cross parallels between being a successful crypto trader, a successful business person. I think that the most important thing and all markets are nuanced, and one market might be completely different from the next in terms of internals, liquidity profiles, the list can go on. But I think that the most important thing, no matter with whatever market you're trading, and when you're new to trading, you're going to hear this over and over again. It's sort of, you always hear the cliches, and cliches are repeated for a reason, right? There are these cardinal rules, these sort of tenets that you always have to follow. And they sound like the most daunting. So in my opinion, the most important thing that someone needs to do when they are, whether they're trading, like I said, leverage ETFs, Bitcoin, the benefit of trading crypto is that it is technically driven. So there's less internals to focus on. But the most important thing to do is build off of, 3 to 4 anchoring points, right? You have to have some type of axiomatic approach to the market. And it doesn't really matter, honestly, what these are. And for those of you that follow me on Twitter, you know that from time to time, I could sort of, pull on the tail of the LA wave traders, okay? But I'll be the first person to tell you that when you stick to the approach of Elliott wave, right? When you are applying proper risk management, applying proper bet sizing, that you can be a successful trader, okay? Because it really just comes down to having this axiomatic approach, having this foundation. And I think that, that sounds really daunting because you hear the concepts of, you have to have an edge. So an edge seems like this sort of Indiana Jones secret, right? That you have to find in some hidden tome, but it's really just a statistical edge that you have, where you're taking essentially a coin flip and turning it into, instead of a 50-50 coin flip would be great for trading still. You're just putting sort of you're making yourself the casino rather than the player, all right? So that's the most important thing that you find in any kind of edge. And it doesn't mean that you are a stat arb trader. Immediately, it sort of brings to mind this very complex approach. Your edge can be your discretion. It could be having viable discretion, being able to cut your losses quickly. Your edge could be, on a behavioral psychology standpoint rather than, a technical market-driven standpoint. So you have to absolutely start from a foundation though, where you have these core rules, because it doesn't matter what your goals are in any market. If you don't have rules that you stick to and apply consistently moving forward while taking records and documenting, you're just kind of arbitrarily going about the market, right? You'll never have an idea as to what works in a large sample, what does not pan out in a large sample, because you're constantly, trying to chase yield by chasing momentum, following what you see on Twitter. So you just have to start with either picking up a book, going onto YouTube, finding 3-4 core tenets, like I said, that you stick to, and really just delving into that completely. And I think that's a good place to start. I don't know if anyone else wants to elaborate on that.
Yeah, I'm happy to.
Go ahead.
Oh, thanks.
Go.
Yeah. So I think it's a very good starting point, especially trying to have some easy, simple founding techniques you use and then expanding on that. You said the secret to succeeding in trading, it's really the secret to succeeding in anything at life. You need to go at it with a good mindset. You need to have a plan, and you need to have a clear route set out for you. The easiest way to find that clear route is to look at people who've done it before, try and learn from them, try and copy what they've done. And then once you've got a hang of the game, you can start to innovate and start to try different strategies. So picking that really simple starting point, be it like 1 or 2 indicators and some basic understanding of supply and demand in the market, whatever resonates with you, stick to that, and then try expand beyond that. Yeah, Scott, if you had something to say as well.
Yeah, to touch on what both of you said, and definitely going back to what Ryan said, I think that people get lost in the indicators and strategies and all of these things. And anyone who's been trading for a long time has shuffled through all of them in their career. Like, I've been an Ichimoku trader, supply and demand, support and resistance. I've used literally every indicator. I used to have charts with 1,000 lines on them. And I think actually you sort of back into a much more simplistic strategy the longer you do it. You don't add more, you actually strip away. So I think that keeping it simple is really important. But all of that said, I mean, it doesn't really matter what strategy you use. It doesn't matter if you sacrifice baby unicorns to the Scientologists to find your entries. It really doesn't matter. All that matters is the way that you manage your risk and avoiding blowing up your account, which as a new trader you will do, and probably will be the most valuable lesson that you have. Yes, you can copy people, as Krush touched on, but you can't feel the pain of their losses until you've sort of experienced it yourself. But really, the only strategy and the true edge, in my opinion, comes with emotional control and an ability to manage risk. The rest is details.
Absolutely.
In case anyone misunderstood what I said, definitely don't go out and copy traders. Copy their processes, not their actions.
I was not trying to imply that. You can all copy. You can have my losses. They're yours. Enjoy.
What you were saying was you could, the best thing to do is essentially, you could see further when you stand on the shoulders of giants. When you see people that did something well, be a good copier, right? Don't just try to go copy every little past iteration of success that might be anecdotal.
Look at the big picture, yeah, for sure.
Yeah.
With regards to that. And I guess something a little more specific to trading in itself, where your success will be helped hugely, and something I talk about a lot, is you need a strong mathematical foundation. There is no question that this is an undisputed benefit. If you have a good understanding of ratios, percentages, basic mathematical concepts, you're an advantage to everyone else who does, whatever their strategy or technique. So if you're a new trader, that's another great starting point alongside trying to get your trading journey on point. Just go back to high school mathematics. Make sure you understand all the key concepts, statistics in particular. I don't think mechanics is going to help as much, but yeah.
Totally. Absolutely. Josh, what's got, man?
Yeah, no, I think overall, the term secrets is really, in the end, it's knowledge, right? It's experience, like you guys have talked about, and really it's really hard when you first start to get into any type of market and to trade it and to put your real money down. Your emotions really do get the best of you, and especially if you don't know what you're doing. And I just remember putting money down and even seeing it go down $20. My account total, and I would be freaking out. I'm like, oh, I'm already down like $20. And so emotional, like Scott said, just that psychology, it just definitely takes practice. But I think, bottom line is going in and developing a plan, regardless of what you do, because if you set the entry point, if you've got an exit point, you've got a stop loss down, you don't really have to worry about it. You don't have to babysit, right? You don't have to micromanage your trade. You can actually put a trade in, and if you have a stop loss, if you know what you're doing, you can then go spend time with your family. You can go do some errands or yard work or clean the house, man, or whatever you want to do. Go to the beach. It doesn't matter. That's what Instagram traders do. They go to the beach all day, right? So they trade there on their laptop. But you can do that as long as you have a strategy and plan. And I think that's the biggest thing, is to actually go in, because so often, I think we've even talked about on Twitter, those polls, who sets a stop loss, and then literally like half the people say they don't ever set stop losses. They just buy and they hold. Right. So it's kind of crazy. So I think overall, it's just that people need the knowledge and experience, but to definitely have a plan when it comes to any type of trade.
Yeah, absolutely. Great points, Josh. And I think that it's also important to I guess, iterate on that and say that not only a plan for your trade, right? So, your stop loss, your take profit, all these things sort of are trying to mitigate for what are the behavioral shortcomings that you would have if you were constantly trying to micromanage a trade, right? So sort of mechanizing your process to a degree. But also, I think one of the most important things to remind traders is that, I like the saying that screen time, just staring at screens does not equate to chart time. A lot of veteran traders, they like to sort of package their experience in the amount of hours that they've spent at the charts. Staring at, a Twitter feed and a chart at the same time and equating that to picking anything up, I think is misleading. I think one of the most important things is that also not only you plan your trade, but you plan your learning time, right? You have a dedicated purpose for the times you're actually staring at the chart. What do you, are you just staring at the order book because it's fascinating, right? It's sort of like this, again, many people have referred to it as sort of this casino mechanism, right? Flashing lights. Humans are like raccoons in that regard. We like the shiny things and it draws our attention. But it's distracting as well. So if you don't have a planned purpose for what you're spending time at the computer for, instead of just watching the chart oscillate back and forth, pay attention to the order book when we're approaching a major resistance or a major support, right? Have a dedicated purpose in that moment rather than just, staring at the screens, because if you just stare at the screens and you don't really have a purpose, you're going to start creating things where they don't exist. You start seeing patterns where they don't exist. You don't have a dedicated reason to why you're actually sitting down, what you're trying to get better at, right? If you're trying to get better at any particular sport or any particular game, what you'll probably do is categorically break things down and try to improve in those given areas, which I guess is one of the main reasons why you document things, is that you can look back and say, I always equate this to playing baseball for some reason. I don't know why. I guess I grew up playing baseball. But if you're a poor hitter, right? That immediately. You're going to know that you don't do too well on an inside fastball. So what are you going to do? You're probably going to isolate that particular area, that skill set that you're not too good at, and you're probably going to spend the most amount of your time trying to develop in that area. And I think that that's one of the most important things. You have dedicated learning and not just expecting to gain it from screen osmosis. So.
Yes, I'm happy to follow on from that. That's really, really key point. Quality versus quantity with how you spend your time. And we started off by saying, if you're standing on the shoulders of a giant, you have a better view as to where to go. Now, there aren't that many giants around, so you'll have to settle with us, but we can give you a good roadmap on where to go. So we have, in my opinion, 4 different elements you want to start with. So you need a basic understanding of technical analysis. This gives you the ability to form hypotheses of what will work and what won't in the market. As Ryan said earlier, try to pick something really simple so your ideas and strategies can be simple. Now, suddenly you have an idea, and when you're staring at the charts, you're seeing how your idea is playing out. You're not just getting a whole bunch of information which you don't know how to process. You're trying to process a specific thing. So that's technical analysis. You know how to form your chart ideas. Next, risk management. Know how to manage capital. This is where an understanding of mathematics makes it intuitive. But you still need to study. You still need to know the common pitfalls. There are a lot of good books on this topic. And then after risk management, probably the hardest part of trading is psychology. Now, I'm sure someone else can pick up on psychology, but yeah, there's a lot. That's a huge part of it and extremely important as well.
Excellent points. Excellent points.
Yeah, I would say that to build on that, you know, it largely becomes about time management. Sort of funny, the silver lining, I think, with the COVID situation and isolation and the world somewhat going on lockdown, for me, I was always good at only spending, you know, an hour a day on the charts. Well, now that can be 10 or 15 minutes, and I'm actually becoming more profitable the less time that I stare at the charts. Maybe because I have that experience in the past, but when you approach a chart, you know what you're looking for, you identify your levels, and you set your alerts. As all of you have said, there's literally no reason to sit there and stare at it. So if you are going to, maybe Ryan touched on, paper trade it, do something active. But you know, I find that the best thing that you can do to improve your trading is to have a life outside of trading. All you're going to do by staring at charts all day is, as he said, is find things that aren't there, find reasons to exit trades, find reasons to move your stop loss. You're basically just going to psych yourself out of good positions and of your system. So for me, I can check the charts in the morning, set my alerts, and go teach my kid about space, and then, you know, come back, write a newsletter, go teach my kid about about what's happening in the wild, and then keep going with my life. So I do think that you're probably doing yourself a disservice actually by just blindly staring at charts with no purpose in mind.
Great points.
Yeah, I think that comes with experience. The more experience you gain, the more structured your systems become. And I don't think I said my fourth point, which was system development. You need to know how to translate psychology, risk management, and technical analysis into a system. Once you have your systems, you know which market conditions are best suited to you. So Scott, you're probably at the point now where you know exactly when you need to be staring at the charts and when you don't. So you set your alerts in the morning, and when it's game time, you're there. But when it's not, you're a lot more efficient with your time. So for newer traders, this is going to be a lot more difficult because you don't know when's good or not for you and your systems, and you probably don't have a system yet, but definitely something you should transition to with experience. And as much as you can, focus on quality time, not quantity. Staring at the charts and Twitter is not work. It's not going to get you anywhere. If anything, it's going to make you more prone to emotional mistakes, gambling, and yeah.
For sure. And it's a 24/7 market, and nobody can track a market that's 24/7. Anyone who came from a market that wasn't open all the time probably has a bit more perspective and ability to detach, because you could always take your weekend off or do those things. This market never stops, and you have to find a way to detach yourself from that, both emotionally and just physically, because you will absolutely burn out.
Yeah. Can't I guess say that enough. Otherwise, you could spend too much time just getting stuck in a black hole with the chart. So, Josh, you want to add to anything?
Yeah, no, I think the beauty, we've talked about this recently too, is it seems like there is less volatility now kind of on the weekends, at least for Bitcoin, maybe not altcoins specifically. I know there's probably a lot of people out there who like altcoins and trade altcoins, especially if you're getting started, right? Because they are cheaper, as far as you can buy more of that psychology of that. Not looking at market cap, but point being, I mean, we've had this 3-month long range between 8,000 or 8,500 and 10,000, and then the closer we got, to the end, it was literally moving $100 a day, right? So it's those days where you just need to take a break. I mean, eventually, yes, you need to watch for a breakout because it's going to lead to a breakout to the compression, to the lack of volatility. But until that happens, I mean, definitely Saturdays now, more and more, seems like less action's going on, at least with Bitcoin. So definitely take the time off, because even recently, with all the volatility, with all the DeFi stuff, trying to trade some of this stuff, I've lacked sleep over the past couple of weeks, and it's not good. And I can already tell as far as my focus and my ability to focus is down. So I think that taking time away from the computer is good, and I think it actually helps. And when you get back to the computer, you kind of have a fresh mind again, where you can do your thing. So I'd
actually agree so strongly with that. sleep part is essential. When you first past a little bit past the beginner stage, you finally find a strategy that's starting to make you money, and you think any opportunity you miss is the end of the world. So suddenly you've got alerts, you're waking up 5 times a night every night, and no amount of money is worth that. Destroys your health. Honestly, during my second year of trading, this happened to me, where suddenly I found the strategy and I thought, oh wow, this is amazing, this one's the best I'm ever going to find, this one's making so much money, why would I ever sleep? And then obviously that was naive. There's always going to be a new strategy that's better. If it's not better, it's going to be just as good. But that led to almost like 2 years of insomnia, just messing up that sleep. So big advice to new traders: when you find your first strategy that works, sacrificing sleep is seldom worth it.
Yeah, absolutely. I couldn't agree more with that. I mean, you need, like you said, Karush, and you're a big proponent of this, balance in your life. I feel like when you're a new trader, you feel like every opportunity you miss was the opportunity that would have made you, right? That would have catapulted you to new heights. And when you get more experience and you start remembering that, so unless you're trading some kind of delta neutral strategy, in crypto, there is sort of a free lunch with a carry trade. We're all just, if we're a directional trader, we're all punting based on hopefully the law of large numbers working in our favor, which brings to the most important point that if you're going to take a lot of punts, if you're going to take a lot of swings at it, that you have to properly bet size. When you're a new trader, you think that edge is elusive, that, you can't miss a trade, right? Because then you've missed an incredible opportunity. I have to say that it's important to remember that, yeah, that is important when it counts, that counts. So for me, when volatility was low, okay, I shouldn't have been staring at the screen, but when volatility picks up, that's when I need to be in the market, right? But that is something that I've been able to hone in on, right? I've been keen to that. When you're new, you're kind of just always thinking that you have to capture every opportunity. And sleep, I tell people, be a good trader, but become a better portfolio manager eventually, because being a good trader is detrimental to your health. All right. Staring at screens constantly, sitting down, being the whole concept of, running water never grows stale. Well, when you're sitting at a screen all day, you're going to grow stale. Okay. It's going to start messing with even your thought process. No matter how sharp you become from trading, you absolutely need to be able to step away and disengage. And the times that I was able to step away and have that balance, and for me, it's simple little things in life, right? Being outside in the garden in the morning, right? I say I have my espresso and my biscotti, and that is sort of my rallying point. That's one of my resets for the day. I got into yoga for a short period of time with my wife. But the point is to have this balance outside of trading, because like everything else in life, the whole concept of everything is the same as everything else. Okay. Everything is just an analogy and a metaphor for something else in life. And nothing is different with regards to trading. If you're not balanced, you're going to be a poor trader. You might take a lot from the market, but then you're probably going to give it back. Right. So I think that's a really good point, Karush.
Oh, thank you.
So true what you said about position sizing and portfolio management, because it's funny when you start, risk management is like dumbed down for everyone to, I'm not going to lose more than 1% on a trade. I'm not going to lose more than 1% on a trade, right? And that's all they care about. And they think that that's a risk management strategy, which is like the tip of the risk management strategy iceberg. A huge part of managing risk is knowing when to go heavy and knowing when to sit on the sideline, as you touched on. So when there's no volatility, you're just wasting time playing with small positions. But if you know when to really, really size up and really go heavy into the market, I mean, I've been trading alts like a madman for the past 6 months. And then a week ago, all of a sudden, like everyone's saying it's alt season and your account is already up 5-6 times. You know what I mean? To me, it just seemed like that's where the opportunities were while Bitcoin was doing nothing. I was checking a Bitcoin chart only in as much as I needed to like report to people on Twitter asking or like write up a quick synopsis in the newsletter. I just wasn't trading it and there was no reason to. So, usually I'm only trading with 15% of my capital. 3 weeks ago, I was trading with about 60% of my capital. It just seemed like the opportunity was there and it was there for the taking. So those are things that you learn with time, but risk management is not just don't lose 1% on a trade. It's knowing how to balance your portfolio and when to go heavy.
Absolutely. And just to add before someone, picks up on this, when you're a new trader and you're going all in and you're constantly chasing everything, you know, with your complete portfolio size, with a stop distance that's, you know, reasonable stop distance is not close to where the proper entry should be, and your account gets drawn down, you know, negative compounding is a really vicious cycle. So when you draw your account down 50%, you start to get in this kind of screw it mode, because you think, you know, I just blew this account already. You know, why don't I kind of just swing for the fences and, you know, start martingaling or something like that? So risk management, you know, when people ask what's the best advice you could give to any trader, it's become really proficient at position sizing. But then, you know, I hate to sort of keep going off on these rules, right? Like there are hard-coded rules in trading, because as you gain more experience, you realize that like everything else, there's a level of flexibility. Okay, so when I'm talking to a new trader, I will tell them, hey, don't risk more than 2% in a trade, okay? If I'm managing someone else's money, it's a different story. But for myself, you know, if I see an opportunity that I have a really high strike rate on, it just makes sense for me to go more at that, right? I know what my pitch is, okay? So, but you only develop that kind of discretion when you've been doing this for so long, right? Versus applying that earlier on. So good point, Scott.
Thank you.
Okay, I think we have
No, go ahead. No, go ahead. I'm just throwing more conversation in there. But go ahead if you had another topic.
No. I think so. Add what you were going to say, and then we'll go over some of the comments, because I think we have quite a thread of comments.
Yeah, I think another thing to think about too is if you're newer to trading, like we talk about, you know, before, is that you'd probably rather be somebody who looks at the Bitcoin chart or who trades one of the major altcoins than trying to be a jack of all trades and jumping from asset to asset, right? So it's better to learn one chart and to learn how one of these, like specifically with Bitcoin, I spend priority of my time, and you guys may too, just trading Bitcoin over the altcoins. And the thing about it is that all of these crypto assets are highly illiquid. I think that, you know, compared to traditional markets, you know, to see Bitcoin move 10% in a day is just crazy for some people, right? Well, now you've got these new altcoins that are out, and I say new because of like the DeFi movement, right? A lot of these are just coming out in the last few weeks that are literally moving 50% in a day, up and down. And so if you're new to trading, I would just really caution people to, you know, people who are trying to jump in Yearn Finance, right? The coin that went from $0 to $6,000 in a week, right? Well, that's shiny, like you talked about. That looks good. I want to get in that. Hopefully it goes to 20K. I want to buy it now. But the next thing you know, you're down 50% in 2 hours. And so you're probably going to sell it because you're freaking out because you think it's going to zero. So overall, I think if you're newer to trading, to try to get into assets that have been around for a while, specifically Bitcoin, maybe Ethereum, those that aren't as hyper volatile, right, compared to the altcoins, even though Bitcoin is highly volatile. So it's just something to pay attention to.
Awesome point, Josh. Were you going to add?
If we want to move on, we can move on, but I could add if we need more time, if we want to spend more time here.
No, if you have one thing to add, go ahead. Absolutely. This is
just awesome. Just real quick, because I wanted to follow on from Josh's point. Selecting a specific asset has really become helpful, especially later on. Before, I used to take a very broad approach. I'd assume testing I'd done on any asset applies to every asset. Then I realized that's stupid. Obviously, the crypto space, every asset has its own ebbs and flows. And if you isolate and pick specific ones, you start to develop some sort of intuition, a subconscious processing, which can add to your edge, especially when it comes to discretionary decisions, like exactly where do I draw the support level here? Which one of these points do I use as a stop loss? If it's not exact in your system and there's an element of discretion, which basically means you choose yourself, it can really help.
Great point. Great point. All right, guys. So we're going to go over some of these questions that we have in the chat. What I'll do is I'll pick up a question and then I'll, give a question to the group. And let's see, we got a few. Okay. So as far as someone asked about trading against the trend, I lost half of my account in a recent rise of Bitcoin price, just trading against the trend or with emotions. So trading against the trend is sort of one of these phrases that is repeated ad nauseum, right? You always hear go with the trend. And the way I would like to put that is you don't want to try to swim upstream, right, against the current. Going with the trend can also mean not only going with the higher time frame market structure trend, but with what we're seeing right now, I just want to bring this to the DeFi. Crypto it has these mini bubbles within it, right? There are sort of these sector rotations. And I think, from my background from equities, the most important thing was not necessarily knowing where one particular asset was going, but where the flows were going. Okay, so how these sectors were rotating, where flows were moving. The whole concept of, skate where the puck is going. So we see this, as Scott, you mentioned, you've been trading alts for a long time, and now you're starting to see that, alts are sort of in vogue. But, they've been moving for a long time. And recognizing where you are within the trend is really important, because even I got really excited 2 days ago. I got really excited because we were, how do you not get excited? Bitcoin was doing nothing. It was completely, it was listless. So when things get really exciting, when you see that we're in sort of that euphoria stage, step back, understand that, this is where we are sitting within a pattern that repeats itself over and over again. Okay. It doesn't really matter if it's DeFi now or if it was ICOs 2 years ago. It's a hype cycle, right? It's a Gartner hype cycle. These things get very big, and then there's no follow through yet with the adoption and technology. And it was just everyone got excited about something, and then suddenly that sort of Pareto rule and Price's law will be obvious in the distribution further down the line. But as far as going with the trend, start with a higher time frame chart. Okay, just start with the basic rudiments. Higher time frame chart. Okay, because higher time frame chart, you are dealing with every kind of participant, especially when you get towards the extremes. So when we're approaching 10,000 for the first time, 10,000, 10,000, 1100, the swing high, for me, that was a contextually better area to short because it was an easier area for me to define my position if I was wrong, right? I want to be as close as possible. I want to put some meat behind the trade. But once the trend shifts, I can't be thinking about my opinion of the market anymore, because at that point I'm fading a lot of different flows that I am not even, I pale in comparison to. So going with first the higher time frame trend, I think, is most important. Don't look at the higher time frame chart and then go look at the 5-minute chart. Okay, they're candles. They're going to look like each other, right? It's 4 data points. That's really it. They're a bunch of little Russian dolls in terms of the periodicities and the times you're looking at. But start with the higher time frame chart. Look at the higher time frame trend, right? When the trend changes on a major level, on a major contextual level, right? We pass through what I'll refer to as, an area where we see a significant amount of participation come into the market. Don't fade that, right? Look for dip buying opportunities. My bias right now, default bias, is to look for dip buying opportunities. It just makes sense, right? Everyone else is looking for dip buying opportunities. Why do I want to try to fade that? I don't want to be, I say you don't want to try to piss against the wind, right? It's just, you have to go with where the flows are going, and paying attention to the trend in that regard, I think, is one of the first things that you can learn how to do quite effectively. So I'll give, I don't know if you guys want to iterate on that, but otherwise we'll go through some of the other questions, and I'll sort of sling them out there for anyone who wants to, step up to it.
I can only say that very briefly that, trading with the trend, as you sort of touched on, it's a bit of a meme because the trend is very time frame specific. So I would say as a beginner, the most important thing to understand that, and looking at the way that he structured this question, it sounds like he was basically revenge trading emotionally, like continuing to short. Oh, it's up another 1,000, it's got to go down. Oh, it's up another 1,000, it's got to go down. And that's something that you need to learn very early to avoid doing. It's an emotional decision, and probably has nothing to do actually with fighting the trend. It probably has more to do with emotionally wanting to be right. Like I was wrong this time, but I'm going to be right next time, and continuing to, beat your head against that wall and make the same mistakes over and over again. Because listen, almost every market in history, even this one, I believe, trends up, right? I mean, general wealth is acquired by investing and not looking at it, not by trading like a degenerate on a 5-minute chart. It's just, that's a way to lose money. And if you're a beginner, when you're talking about trend trading and all this stuff, just realize that the less trades you take, the less opportunities you have to lose money, right? So trading over and over and over again is just more chances to lose. It's not really more chances to win. So really avoid taking the same position over and over again, a few dollars higher, just because you want to be right.
Great point. I'm going to add another one if you guys want to swing at this. Pinkerton asks, Pinkerton, how much time do you spend a day on trading, tracking news, signals, and so forth?
I
Too
can
much.
handle it. Oh, go ahead.
Go ahead.
Josh.
Go ahead. Go ahead. It's a joke, but it's true. Too much. Go ahead, Karush.
So I've built a routine. I have a morning scan, which I like to do. There's certain assets I'm watching at any point in time. Usually that I like it for that to just be Bitcoin, but during the period where Bitcoin was doing absolutely nothing, I transitioned to the altcoins. I prefer trading Bitcoin in general, but anyway, that's going off topic from the question, which is I'll scan the assets I am analyzing in the morning. I'll set my alerts, and that's about all the time I have to spend on the charts until the alerts go off. But I also have phases where I will go over my systems. I will see how they've performed. I will analyze them. I will try to optimize them. Or I could also try and improve my knowledge in trading. So I'll pick a trading book which I haven't read before and see if I can learn anything from it. I'll pick one of the ones which have really helped me in the past. Maybe I'll try find a useful course which will improve my trading. So there's optimization, and then there's constantly trying to improve your trading. And then you've got your mandatory scans, which you have to do. So that should answer the question somewhat, I think.
Yeah, I think I'll just add to that really quick. I think that you made a great point. Scanning the charts, there is sort of this feeling when you're newer that you have to always be in a trade, right? That you see the market and you have to long or short at that moment. It's like trying to jump in a moving vehicle, honestly. When you know where your significant levels are for whatever your trading strategy entails, you have areas that you can become interested. Doesn't necessarily mean you're going to, but you could set these in advance and have an idea rather than thinking, that you always have to be in position, right? So what you're really doing is you're planning where you might execute. Okay, and having a general idea of where that might be. And that could be something as simple as setting alerts just to know that it might be on the way there, right? Versus constantly, staring at the screen, like we said. I don't know if anyone wants to add to that before we get to the next question. You guys delayed or?
No, go ahead.
Now we can move to the next one.
All right. Normally, you give a nod or say something like no. All right. So as far as strategy goes, this is by Chris Duddy. So, Macro's here. What's going on, David? As far as strategy goes, what indicators do you all recommend to study? Okay. So this is kind of I'm sure many of you guys have things to say about this.
Okay, I'm happy to kick this one off. So one I really like are super simple moving averages. So why are moving averages useful? The mathematics behind the indicators are pretty simple. So you can look at the end indicator, look at the formula behind it, understand how the price data is translating into this indicator, and then it can be a useful tool for your trading. It's very easy to backtest. It can help you spot the trend pretty much instantly. So yeah, very easy, friendly tool, a good starting point for people trying to get a feel for the market.
Great. Anyone else want to add?
I think, yeah, as I touched on earlier, I think they're all good in their own way. It's a matter of how you use them and if you actually have experience and have sort of back tested what they mean. They're all kind of useless in a vacuum unless you actually know the context of what's happening with price and what's going on in the market. I mean, for me personally, like I said, I think I've basically tried every single one that's ever existed. And I've always come back to RSI, but not RSI itself as, in a vacuum. Again, I like to search for divergences in oversold and overbought territory with RSI and price. It's just always had a very high hit rate for me, and I'm just very comfortable taking trades with it. And so it's a core part of my system for sure.
Great. Josh, want to add to that?
Yeah, I think just looking at price, right, and not use indicators as needed. I think they're all helpful, but having 10 different oscillators on your screen is not going to necessarily help, right? So yeah, I think less is more when it comes down to it. So kind of find out what is helpful for you. For me, I like to use volume profile, right, where you see volume per price as opposed to volume for time period. So that's been quite helpful, but definitely support resistance is always good, especially on altcoins. I feel like support and resistance acts pretty does pretty well with a lot of those. So just something to take a look at.
Yeah, great points, guys. I think that all indicators kind of boil down to the same thing. And one, I will say, no matter what indicator you use, make sure that you can explain it, right? So if you're using an RSI, if you're using moving average, make sure that you understand exactly what that means. Is it forward looking? Is it a lagging indicator, which most of them are? The one thing that I have to say about indicators is a lot of times, you'll see people that are using a lot of the same indicator, but it's packaged in different versions. And then they're using it as sort of confluence, but all it is just, it's multi-collinearity. So they're getting the same signal and taking it in 3 different versions and thinking that it means more. All right. So it's really important that you understand how the indicator is derived. And then I think that no matter what you're using, and even boils down to just supply and demand levels, all you're trying to do is find out in that moment and on the higher time frame who's in control, right? So using something like the volume profile to see where most of the activity was, right? So that's Josh and I in Blockroutes. That's most of our focus is on volume and order flow, because we want to see where buyers and sellers are in agreement. We want to see where they're not in agreement, right? We could begin to identify whether things are in balance or in imbalance, okay? But I think it all comes down to whether you're using Ichimoku moving averages, who's in control, right? So if you're a trader who's using a moving average, you might say, well, the 20 moving average is a good indication of who's in control. If you're using a VWAP, which I think is great, you're seeing where the market's putting on risk. If the market is above VWAP, you might have a better argument for saying, unless it's too far extended, that, at least longs, if we're considering 1-for-1, at least longs are in better position, right? So identifying who's in control, where the other side is in trouble, I think that all indicators boil down to that. And if you're using an RSI, what you're seeing is that, momentum is beginning to taper off, right? Either to the upside or the downside. But really the most important thing is it's not the tool, it's the person who's using it, right? These are they are decision support tools. That's really what it is, right? You have to, I think, have a first, it first has to be, price and volume, I think, because that's what the market 100%. Breaks down to, where is price being accepted? All right. Where are buyers and sellers willing to duke it out? Where are they, willing to? There's a big meme when it comes to volume. Volume's dropping off. Well, yeah, we're inside of a range. It's not doing anything. The only thing that matters is when we change direction, that buyers and sellers are showing us that they like that, or that they don't agree with that by an increase in activity. So, indicators, stick to 1 or 2. I would say moving averages, RSI, if you're going to go that route initially, because there's thousands and thousands of indicators, custom indicators all out there. And really they're just showing you one thing in that moment and who is in control. So I think you both had great suggestions with the ones that you put forward. So let's go through some more of these questions. Okay. Let's see.
I think it's actually okay. We got already 3 questions, so it's quite good. So actually, Ryan, Scott, Josh, Kurush, thank you for this great discussion, guys. I actually feel like I've learned so much from you. And I wanted to move on to the fun part of this live stream. So we asked our users previously to send some of their favorite crypto-related memes on Twitter. And Ryan here will share now our favorite ones with you. What do you think?
I'm looking through Telegram right now. So
can we actually pick our favorite ones from the ones that you're gonna show, and we want to reward this person who posted the best one with a $50 trading bonus.
Go on to Twitter, right?
Yeah.
Okay, hold on 1 second. I got to pull that up. I was ill prepared for that. I thought I was going to be looking at that on my phone on Telegram. All right, let's log into Twitter now. And I'm going to Phemex.com, right?
Yeah.
Okay. Yeah, you should have been prepared, buddy.
Are we looking at the memes? They're actually in Telegram from what I see.
Are they?
Yeah.
Well, I don't want to go into my Telegram because I have about 100 different conversations in there, and for the sake of. Okay.
I'm gonna check out the memes now. Ready.
Do we have any memes posted on Twitter?
Yes, they were posted on Twitter.
I don't see any memes yet.
Well, I've got some right here.
That's
Where are you looking, Josh?
Is it what do we do? Share the screen or what?
One of you can share the screen. We can choose the best meme. Yeah.
Share your screen, Josh. Share it. Share the Doge
here.
one.
Okay.
All Doge
I
memes.
I can't share the screen, but maybe you can, Ryan, if you go into the.
You might need permission.
I'm looking
Yeah.
for. How do I give permission?
Wait a second, guys.
See if I can get. Yeah, I won't have permission either.
Okay. Ryan, you should have the permission.
Okay, how do I give permission? Make host.
Yeah.
All right, Josh. I've just.
Oh,
Okay.
Josh is the host.
Got it.
Congratulations, man. You worked hard.
With great power, great responsibility.
Okay. Sorry about that.
We've got some memes right here. So we'll go ahead and take a look through. I think there's about 4 or 5 of them. So me most of the time when you buy the dip, but it keeps dipping, right? So that's a pretty good one. I've seen that with other people too, besides Mel Gibson. So we've got the classic, why would a fly land on something like this? Rats should be ashamed for falling for this trap. Bears, this is ridiculous. And then the smiling at Bitcoin because the joke that it's a Ponzi, right? So Doge, of course.
Yes.
Dogecoin then.
Nice.
I'm joke coin, Dogecoin now. Dogecoin to $1.
It's never been a joke. It's never been a joke. That's insulting.
Yeah, Elon Musk would like this one.
Yeah. And then we've got Back to the Future. We have to go back, Marty, save the world, no buy Bitcoins. If you guys watch Back to the Future, I've listed one too, where in the movie he says, in the future, I wish I could go back in time and put some money on the Cubbies. And I've seen one before where he says, I wish I could go back in time and put some money in Bitcoin, so I think the Back to the Future thing is funny. And then Wolf of Wall Street here, understandable. Hey, listen, I quit. He showed me this Bitcoin thing. So what do you guys think? You want Doge, Back to the Future, Wolf of Wall Street, the classic trap, or buy the dip?
I can't even look at Mel Gibson.
I like the Marty McFly. Yeah.
I'm gonna agree over there. Back to the Future one was that one made me chuckle.
Yeah.
I'm not gonna fight the tide, but I vote Doge.
Okay. Well,
I'll go with you. I'll go Back to the Future with you guys.
We'll say Back to the Future then. I think that's creative, and I actually haven't seen this one before. I saw the other Back to the Future, so that's the winner. Back to the Future.
Yeah. So we have the winner. So congrats to the winner. We'll contact the person that sent this meme on Twitter soon. And before we finish, some of the followers have submitted many questions for all of you on Twitter the last days. We have the top questions, and it would be great if you could give us a brief answers. So top 3 questions won actually $50 trading bonus. And question number 1, what personally triggered for each of you the thought, now I am confident enough to share my trading experience with a wider group, example, via social media?
Anyone want to start with that? I guess I'll start. Yeah, I think it just comes down to there's no feelings involved. I think it's just having multiple edges in the market that have a positive expectancy. But I do have to say there is a difference between being a good teacher and being a good trader, and there might not be, those two might not go together. So there are plenty of just absolute brains out there that couldn't teach me a thing about advanced options maths, right? I have at best maybe a tenuous grasp compared to what a real options trader or options market maker would understand. I have all of the requirements for my particular approaches, but I could never teach you how to trade options effectively. I could probably teach you how to punt options, right? But when it comes to trading and teaching, I think that, a good teacher is going to be a good teacher no matter what, right? Whether they're teaching, how to build a shed in your backyard or they're teaching you how to trade, right? That's a matter of delivery and patience. And, as far as trading, it boils down to, do you have it or not, right? So in Block-Roots, we have a phenomenal online education platform, and we take live trades. So I take live trades in any live stream I do. We have a separate Block-Roots account that has a substantial amount of money in it, and we've returned nearly 40%. Okay, we've done this in front of our users, show us this is what we're doing, this is how we have returned, and this stuff works, right? And if you want the APIs to the exchange, absolutely, you could verify it yourself. And I think that that's the most important thing, is that there is a evidence of success, right? And you actually have first you have to come with your word, right? But that's really what it boils down to. Are you effective at doing what you say you do the best, right? So that's all it really takes. And then if you're a good trader and a good teacher, people will let you know in your delivery, right? Are you effective at teaching people? They'll either crash and burn or fail, but just understand no matter what, statistics are going to be statistics. And if you're teaching 20 people how to trade, maybe 3 of them will catch on.
I think you just need a really thick skin. And if you're not emotionally equipped for taking a lot of unnecessary criticism, then I would say don't share anything with anyone. Keep it to yourself and go about your merry way. Because the minute that you put it out there, you're opening yourself to both justified and unjustified criticism that will be constant as your audience grows. So you really, really do have to, know yourself, know what you're doing, and be able to ignore all the noise, because otherwise it's really, really not worth it to try to put yourself out there.
So I actually started my Twitter account by live trading an account. And I did this for about 60 days straight, where I posted every trade I did, put out at least some evidence of success. I was learning myself a lot as I was doing it. And eventually I had enough data supporting that I had a positive expectancy trading. I think naturally I'm a decent educator as well. I can communicate complex ideas in a rather simple way, and people were resonating with that. So I transitioned to doing more and more educational content. And so started out as just sharing my journey and eventually turned into what it is now.
Awesome.
Yeah, and everybody's wrong on occasion. So I think like Scott said, thick skin and I mean, traders lose, right? And so if anybody's got 100% strike rate, win rate, they're full of it. I mean, nobody has 100% win rate. So I think people should share their ideas. I think that the beauty of Twitter is that we can all share our ideas, and regardless if you're quote bullish or bearish on something, then listen to the other person or hear what they have to say and say, great, I think that that's a great idea. And if they're right, great. And if they're not, it is what it is, right? So you're going to be wrong, and you just got to be able to know absolutes, right? So it's just ideas.
Great point, John.
These are some great answers, actually. Thank you. And we have a second question that we chose, that is, due to different countries, different attitudes towards regulations, how do you think and arrange on the road of internalization?
Rephrase that again. Say that again.
Due to different countries, different attitudes towards regulations, how do you think and arrange on the road of internalization?
Yeah, I'm not understanding that.
Yeah, is it about I mean, maybe the question is about mainstream adoption. I mean, is that kind of what we're getting at? I mean, I think that Bitcoin is somewhat starting to prove to be a little more regulation proof, which is good. You have to get to a certain point where they can't stop you. And I think that, we've seen Bitcoin remain strong in the face of a lot of adversity, if that's specifically what we're talking about. We've seen, China bans, India coming back online, China coming back online, Trump tweets, like all the things that could quote unquote stop it. That said, I mean, government intervention is probably the largest threat to the space, at least to the ability to have an off-ramp. They can't stop Bitcoin, but they can certainly stop me from cashing it out, which, would be problematic. But I do think that regardless of regulation, that there will be bumps in the road to eventual mainstream adoption. And those are things that I think we're starting to see proven, banks in the United States will be able to custody crypto. PayPal and Venmo are opening the doors to 320 million people on a platform that they trust to buy Bitcoin. So that, I think that's removing a lot of the security hurdles, the fear that, it's just a gimmick and all of those things. So I do think regulation is a major threat, but I don't think it can be stopped. I think it just can be stifled for a little while.
Great point. Yeah, absolutely.
Thank you so much. So the third question would be, if COVID-19 has slowed many economies around the world, but as a crypto trader, has it affected you negatively or positively?
Anyone want to take this one?
Well, I think in the end, like if you think about markets are always moving, right? We were talking about earlier that the market's 24/7. And so you can make a market regardless if it goes down or goes up, right? Depending on how you trade. And so if you're somebody who's just quote a holder, I mean, if the market's going down, you're not going to make money, right? You're not going to be profitable in that manner. But if you know how to, short, and if you know how to trade the trend, a downtrend, then you're going to be successful, right? So I think overall markets move 24/7, and it just comes to what you're comfortable with. I think Scott, you've even said in the past that you weren't always a big fan of shorting, right? And so I think that everybody has different strategies. Some people are really good at shorting the market, and that's what they do. Like that's their bread and butter, and they look for that. But other people, they're better at longing, so I think it depends on the strategy.
Yeah, I totally agree with that. Awesome.
Okay. Thank you so much. So we have the last three questions that were randomly selected and that won actually 365-day premium membership on Phemex. So question number 1 from the randomly selected comments is, was it hard in the beginning of your trading to not overanalyze everything and spending too much time on that? How did you become more proficient as time went on?
I think we touched on this earlier in the stream. Where we spoke about that's just experience. As you gain experience while using a specific select set of tools, you start to learn when you have an edge in the market, when the times are for you to go spend time on the charts and analyze them, and when you're just wasting your time looking at the same data again and again when nothing's actually happened. Okay,
thank you for summing it again. And then another question is, what's the best advanced way of developing and improving trading skills as a learner? Again.
Want to take this?
Okay. I mean, I can take it again. I'm happy. No, Ryan, you've taken most of them. So if you want the most advanced and best way I can possibly think of to take your skills forward as a trader, check out my free course on my Twitter. You can find a pin on my page. But yeah, no, joking aside, just again, we touched on this earlier, have a roadmap, have something you stick to clearly and follow that process. Don't just try everything that gets thrown your way. Actually have a plan before you move forward. Quality time over quantity, just raw quantity.
Absolutely. Great point.
Thank you. And the last question, what would be a good strategy to place a perfect stop loss, and should it be adjusted afterwards?
So I'll just
go ahead. Yeah, go.
So when it comes to stops, I think you have to take into account overall levels of volatility. So if you're in a trending market and the normal trend says that, over a 14 or 7-day period, that price is going to move around $200, $250, well, that gives you some idea as to what you need to incorporate into whatever stop you're using, because otherwise you're just going to get shut out in market noise. So take into account current environment conditions rather than just sort of the oversimplification of just structure. But I think, Scott, you wanted to take off with that too.
Yeah, I mean, I don't think there's almost any reason ever to move your stop down. If you have a plan and you've sized your position according to where you wanted to place your stop loss, nothing that happens after the trade enters should convince you that you need to lose more money and allow yourself to do that. But I do definitely believe that you should move a stop to lock profit in. So if you're well in profit and you see a key resistance broken, then and price continues to advance, I think moving your stop up, comfortably below that level to allow for a support test is a really good move, because there's nothing worse, especially as a beginner, in turning a profitable trade into a loser. You're up 50%, you get a little greedy, you think it's going to go, it starts to drop, you refuse to exit, and all of a sudden it's past your entry and you're stopped out. We've all been there. And even worse, that's when people tend to reduce their stop, because they're like, I was in profit, this is going to go back the other way, I'm going to stop out right when it reverses. So I mean, obviously, like, the way that you engineer your stop, sourcing liquidity, looking for where you're likely going to be the stop hunt. The joke, your stop loss is a whale's entry. You don't want to be that guy. But generally, once you've enacted your plan, you should step away and let your plan, play out without making any adjustments.
Great point.
Thank
Josh,
you.
may I-
Yeah, Josh.
No, I just think that entry is always going to be important, So when it comes to if you're able to read the chart and predict a possible price movement to a certain place where it wicks down, as I always say, if the price doesn't stay there very long and you get in, it's probably a good sign that but if the entry is super easy and you put your stop at a obvious place of structure, right, support, you're probably going to get stop hunt, so just know that. So I think entry is also really important as well too.
Great point.
I'm going to add a quick point just right at the end to wrap that up. Everything everyone said was fantastic advice, but don't just blindly follow it. The best way to find out how to place a perfect stop is to backtest and develop get data. Gather data, see what works, see what doesn't. The price history is right there for you to look at. Test your strategies and see where the optimal stop placement is for you, while using our tips that we've just given as a guideline.
Great point. Great addition.
Yeah, thank you. Thank you for those answers. They were actually perfect. And for all the winners, we will contact you shortly via Twitter. And congrats.
Awesome. Congratulations, guys.
So, well, that's about it for today from us.
Great.
Thank you, guys.
We are done with the first episode of Phemex Crypto Talk. A special thank you to everyone who have joined us today and took part in the live stream. And we really appreciate your support. And we hope to see you again during the next second episode real soon. And special thank you to our guests. You were all amazing and we have learned so much from you. And we'll be looking forward to meeting with you again in the future. And yeah, thank you again and see you all next time.
Likewise.
Thanks.
Thanks,
Bye.
guys.
Thank you.
Thank you. Bye.